A quick one, but does it give me a better view of the market? Do you think if we have an increased ETF like we have on Wall Street and a few other European markets, do you think, or the Asian markets, do you think it gives me a sense of what will happen to equities, what the big-time investors are thinking, what they are doing? Will it give me the ability to predict the market sentiment a little bit further, or where prices of the main asset or the underlying assets are really going?
Well, yeah, of course, yes. The underlying assets here are the securities that you have put together. In our market, we've seen more of equity ETFs. Those are ETFs that are tracking indices that are provided in the market. So whatever sentiment each of these securities, for instance, if you look at the ETF that is tracking the consumer goods space, whatever sentiment is driving the underlying securities that make up that index will also affect the pricing of the ETF, because think about it, for the investment manager, the asset management company, for example, that is tracking this particular index, what they do is to mirror the exact composition of the basket. So if you're mirroring the banking index, for example, the NSE banking index, for example, there are about 10 securities in that basket. The investment manager, the asset manager in this case, will buy the exact same securities in the weighting or in the proportion in which they are weighted on the NSE index. Because your return from the ETF must not be significantly different from the tracking of that index. The only difference here is that because it's managed investment, the asset manager will also get to charge a fee, but it's much more lower in terms of charges than what they charge for all other mutual funds, say money market securities that are not trading, on the exchange. So essentially, what you do when you buy an ETF is that you buy an index. For example, if the index is tracking, if the ETF is tracking an index, so it mirrors the sentiment in the market. So now that the sentiment in the market is down, say for consumer goods, for example, you see the same effect on an ETF that is tracking the consumer goods index. So essentially, it's the same. And in fact, globally now, we now see more ingenious products that are even trying to track the ETF itself. So we see futures. People create other products like futures, the futures of an ETF that is also tracking an underlying or some set of underlying securities. So it's just a way of making the market more, deeper, and providing more options for investors to deploy their investable funds.
Robert, it's a very complex world of financial markets papers, isn't it?
Yeah.
Let's leave it there for today. Thank you very much. I wish you folks all the best. Very complex out there sometimes for some of our viewers who may be just getting their 1.0 lesson in exchange traded funds. So let's come back to the debt market. The Buhari's administration will continue to borrow till the end of the year. This is December. We're getting the first week of business on. As you heard, Sukuk bond will be coming through via the Debt Management Office this month. The Health Ministry says the second tranche of the 280 billion green bond, which was floated in July, between July and August, will be coming to the market again this month. Of course, we're done with the Eurobond. We have the DMO December calendar still ahead in about 2 weeks' time. Put that on the table. Meantime, investors are chasing the yield curve on Market Street, and that's one of the story. Yesterday, you saw the dated Treasury bills, yields north of 13.7%, 14.7%, 14.85%, effective yield 17%. That's the cost of borrowing by the current administration. Of course, our dream of a single yield curve seemed to have faded out. Let's get a bit of where we are going today as far as the debt market is concerned. Chioma Udu is joining us from FMDQ Exchange Place. She's a fixed income dealer at GT Bank, one of the Tier 1 listed lenders. Good morning.
Good morning.
Yes, yields are going heavenward. Looks like you folks in the fixed income market are the ones smiling at this time.
We have seen the central bank the OMO office, the debt management office, actually said that they're not coming in this month to have a primary auction. So to that respect, we've seen about 78 billion being redeemed by the government. However, the effect has been tapered by the central bank offering OMO auctions on a daily. Yesterday, they offered about 94 million was taken out of the system. As we currently speak, they have offered about 180 billion into the system, and that is going to also take out some liquidity into the system. That has tapered the effect it would have had if the debt management office isn't coming this month to offer primary auction to the auction.
Okay, so the debt office says there will be no December Naira paper auction. Yes or no?
I didn't hear it properly.
The debt management office says there will be no December Naira bond auction.
Yes, they are redeeming their treasury bills, about 78 billion. Okay. Yes, but we've seen the central bank constantly coming to the market to mop up excess liquidity. So the effect on yields has been tapered by that action.
Anything significant as far the maturities which will come through tomorrow? And what the expectation is from the central bank?
We have over 680 billion maturing into the system tomorrow. We expect that the central bank will come in and offer OMO auction. And then also we have a retail auction on Friday. So we're going to see a balanced effect where the central bank mops up the excess liquidity and then banks try to fund up their retail auction.
Okay. Thank you very much, Chema Udu. Very straight to the point, and thank you for bringing us up to speed. What's happening on your market straight from FMDQ Exchange Place. Chema Udu, a fixed income dealer at GT Bank. We'll take a break. Let's step back into the world of equities, shall we?